right now. We are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld, taking you through to that closing bell with a global simulcast. Joining us in the radio booth is Matt Miller and Alexis Christoforous. Carol Masser and Tim Stenovic have the day off. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube on yet, Matt Miller, another record-setting day for U.S. equities.
Yeah, another huge day of gains. I mean, not huge, but after we hit a record yesterday at the close and the day before, and of course, 8 weeks of consecutive gains, we're looking to put in a 9th week. We got to have a decent day tomorrow, but right now, 75.64 is the level, and really been driven today by initially an Axios report, then confirmed by Bloomberg from sources that the U.S. and Iran have a memorandum of understanding worked out to extend this ceasefire in which we continually fire back and forth at each other. We just need the president's sign off on that.
I'm actually looking at the retailers today because, boy, are they having a nice showing. We've got...
You're looking at my gainers? Aren't you the decliners? Aren't you doing decliners? I haven't done this show in a while, but usually one person does.
We're going to sort it out when we get there.
Okay, I can do decliners if you want me to.
All right, well, we are going to get some earnings after the bell, too, from the retailers. That includes Gap. We're also going to get some big ones, Katie, in the tech space, and that includes Dell.
Yeah, absolutely looking forward to that. And it was a big day for retail. It seems like this consumer that we keep talking about, tracking so closely, keeps spending. And then, of course, you have the tech side of it all, which sort of feels, macro agnostic.
We get the closing bells in New York, with more than half of the stocks in the S&P 500 in the red. But that no matter, because the ones that do matter are in the green, like your Microsofts, Nvidias, and AMDs of the world, enough to push the S&P to another record high, 75.63 and change, as we wait for these numbers to settle. But that's going to be up by about 40 points or 0.6%. The Dow Jones up about 25 points, less than 0.1%. The NASDAQ composite adding about 200 plus points, or about 0.9%. Similar story for the NASDAQ 100, and the Russell 2000 getting in on the action, gaining about 17 points or 0.6%.
All right, so as we said, another new record today for the S&P, 75.63, 75.64. If you want to go ahead and round it up, and you're likely going to want to do that. I was just looking at the analysts' survey. 8 of the banks that we survey expect 8,000 or more by year, and that includes Morgan Stanley, that includes Goldman Sachs, that includes J.P. Morgan, and this, I guess you could call it a melt-up, eventually continues, although it has been really driven by earnings, mostly from the hyperscaler and AI space, but as Alexis mentioned, today from retailers as well.
All right. Well, we are going to get to retailers in just a second, but we do want to go back to the tech space here. We are getting earnings right now from Okta. Of course, this is the application software company. Here's the bottom line number. EPS in the most recent quarter, a beat, 91 cents a share. The street looking for 85. Revenue, a beat, $765 million. Street looking for 752. Here's your guidance. I'm going to go for the full year. For the full year, EPS, a range, 379 to 387. The street was looking for 374 to 382. On the revenue side, 3.19 billion to 3.2 billion. Its previous guidance was 3.17 to 3.19. So a modest beat and a modest raise, and at least the knee-jerk reaction is to the downside.
Let's also talk about NetApp, those numbers crossing the wire right now. When it comes to 2027, adjusted EPS, the forecast there beat estimates. The company gave a range. They see that between $8.70 to $9. The estimate had been for $8.53. So even the lower end of that range, well above the estimate here. You take a look at the look back first quarter adjusted EPS, or rather the expectation for that EPS figure is between $2.05 to $2.50. The estimate was for $1.84. Again, big beats here, and you can see that shares absolutely flying in the after hours, Matt, higher by about 13 to 14% right now.
All right, I'm looking at Autodesk, this company which makes the systems, software systems used by builders and architects, currently looking at shares trading just a little bit higher in the aftermarket after announcing a multi-billion-dollar acquisition. It's going to buy MaintainX for about $3.6 billion in cash. It says MaintainX is a leading modern maintenance and operations an operations solutions company. So a $3.6 billion all-cash transaction, and we're going to get the earnings from Autodesk right now as well. We have adjusted EPS $2.99 or $2.99 versus $2.29 in the previous year. First quarter net revenue was $1.93 billion compared to $1.89 billion as the estimate. So beating on the sales line and beating on the operating margin line as well, 38% compared to, well, 38.6% was the estimate, so just beating there. And beating on billings as well, $1.69 billion. The estimate was for $1.54 billion. So it looks like in terms of everything except for the forecast, they're beating. That's important because they say second quarter adjusted EPS is only going to be $3.10 to $3.14. So we'll watch how the street reacts to this. But so far, the shares now they're turning down a little bit in the after-hours trade. Yeah,
I'm actually curious about this Maintain-X acquisition here. It's kind of interesting. We were talking yesterday and the day before on the close about this idea of whether we were actually going to start to see more M&A activity with regards to some of these privately held companies in the AI and tech space rather than IPO exits. And this is a big one. I mean, we're talking about $3.5 billion here. So not chump change here. And one of the guests we talked to yesterday, guys, basically said that we will likely see a lot more M&A activity rather than just IPO exits.
Yeah, absolutely. And that seems to be, again, the story when it comes to Autodesk. You can see the shares actually moving higher in the wake of this news. Again, a double whammy when it comes to that transaction, but also the earnings that they reported there. I do also want to revisit NetApp because what a move we are seeing in that stock. You know, you think about the forecast that they gave, healthily beating estimates. Their stock absolutely soaring higher by about 9.5%. We were looking at gains of 18% earlier, but still nothing to sneeze at, Matt.
Yeah, we are also getting Dell earnings, which shouldn't be sneezed at either, and they're raising their fiscal year 2027 AI server revenue to about $60 billion. Their estimate going up $10 billion to $60 billion. They had previously said it would be $50 billion. They see full year revenue in total of 165, that's for this year, 165 to $169 billion. And they had seen revenue of 138 to 142. So from a top end of 142 to potentially 169 billion. The Dell shares are soaring in the aftermarket after this, or I think it's fair to say jumping is probably better than soaring. Right now, 3.5%, as you can see there on your screen. But they
also raised their revenue forecast for the year.
Exactly. Yeah, they raised their full year revenue forecast to a top end of $169 billion, and they had seen $142 billion. So the outlook for Dell, whether you're talking about the full year in total or the AI server revenue, much higher than they had previously seen it.
And when it comes to the AI server, obviously that's part of that infrastructure solutions group. We should just point out that revenue just in that group alone is basically triple what it was a year ago. And of course, Dell, one of the big beneficiaries of the AI build out. Katie, I thought software companies were supposed to be a beneficiary of this as well. Yeah,
absolutely. Some dispersion there. I will just point out that the gains that you're seeing in Dell, they come after a 153% year-to-date rally for Dell. So we'll see if that holds. I do want to talk about MongoDB because it is pancaking right now after giving their numbers. So their first quarter adjusted EPS, they beat estimates on that line. First quarter adjusted EPS coming in at $1.32. The estimate had been for $1.19. They raised their full year fiscal 2027 guidance as well, but still you can see that when you look at the shares down about 17% right now after reporting that first quarter result here. We're going to take a look at why necessarily, because again, taking a look at the first quarter numbers, not too bad here.
So MongoDB getting hit hard as Dell rises on earnings. Let's take a look at American Eagle Outfitters. That's where I get all my clothes. First quarter net revenue, $1.2 billion, barely beating the estimate of $1.19 billion. Adjusted EPS at 14 cents. That also beats the estimate of 12 cents. And yet, the shares dropped 16% after earnings, right? Well, right now down 12.8%, but getting hit hard after beating in the reporting quarter. So I'm going to have to look a little bit deeper into this for an outlook, but it looks like Wall Street expected more here.
Yeah, and American Eagle's been a little bit more of a basket case, dealing with a lot of inventory issues, as well as just kind of let's just say management issues with regards to getting that business back on track. Of course, we are still awaiting those earnings out of Gap, which has been a much more of a successful turnaround story. I do just want to turn back to MongoDB for a second, because the shares all over the map. They were down about 20%, now down about 10%. And yesterday, when we got those earnings out of Snowflake, there was this idea that basically everything in that sort of a software ecosystem, those second-tier software companies, the ones that are basically more the backbone software when it comes to the AI build-out, would somehow be beneficiaries. I'm trying to comb through this release, Katie Greifeld, and I'm just a little confused as to why there's such a negative reaction here.
Yeah.
Maybe it's just because the guidance wasn't high enough, but this is definitely something to keep an eye on.
Yeah, absolutely.
Yeah.
Again, you take a look at adjusted first quarter EPS, that came in above estimates. Same thing, too, when you take a look at revenue. We're going to continue to keep an eye on that, because that is a sharply negative reaction on MongoDB.
Also, I mean, I'm just wondering why American Eagle. This is the Sydney Sweeney thing, right? She does the jeans.
Yeah.
Travis
Yeah.
Kelce, too.
She loves those jeans.
Kelsey was part of that. It was a very successful ad campaign.
And the guy who's married to Taylor Swift. So I guess maybe their outlook, they only reiterated their fiscal 2026 guidance. So maybe it wasn't strong enough.